Welcome back. It's time now to take a look at the top business stories. Debt defaulters still eligible for bank loans. Dubai International Airport to see 52 million passengers this year. And Dubai to sell 5 million tons of carbon per year through carbon credits. The GCC markets ended in negative territory today, and the UAE bourses also ended lower. The DFM was down 1% to close at the 1,612 mark. In the property sector, Emaar Properties lost over 0.5% and Arab Tech fell by over 1%. Emirates NBD rose by nearly 0.75%. DP World gained nearly 1% and DO fell over 1.5%. 81 million shares were traded, valued at 120 million dirhams. And over in the capital, the ADX fell 0.4% to close at 2,659 points. Abu Dhabi Commercial Bank gained by over 1.75%, while Abu Dhabi Islamic Bank fell 1%. In the property sector, Alder Properties was up by nearly 1.75%, and Suru Real Estate dropped nearly 0.75%. 76 million shares were traded, valued at 99 million dirhams. And now let's take a look at the GCC markets, which ended mixed today. Coming up now, let's take a look at various currencies exchanged into dirhams, followed by the price of oil, precious metals, and a selection of commodities. And to talk about the markets this week, we're now joined by financial analyst Bruce Powers. Welcome to the show, Bruce. How are you today?
Hi, good to be here again.
We had housing figures out from the United States, a rise of 18% in December. That's the largest number since 1992, quite a number. The housing market is more or less the aorta of the U.S. economy. What do you think these numbers reflect? Is there a real turnaround in the housing market, and what does that mean for the economy?
Well, certainly the numbers came in positive, and the market rallied on the back of that news. But if we look a little deeper, we'll see that 72% of that surge came from the western states. And this was partly because of a year-end deadline and a tax credit in California. So this is a bit of an anomaly potentially, and not really indicative of the true status of the housing market. So I think when we get into January, we'll get a better number, not influenced by that year-end deadline or that year-end expiration in California. So it's not as good as it looks.
But the market reacted quite positively.
Absolutely,
the Dow is near 12,000. That's a level we've last seen in beginning of 2008?
That's right. The U.S. market continues to be very strong, and it continues to rally into new highs. The central bank news yesterday didn't help or hurt either, since they maintained the current policy. And that's looked at as very positive for the market because they're continuing to pump liquidity into the system.
Okay, the times of cheap money are not yet over. Cheap money, it's also flowing to emerging markets, the BRIC economies. Which markets do you find the most promising at the moment?
Well, pretty much most of the markets are still in bullish trends, other than maybe China. We're seeing some short-term correction in Thailand and Peru and Indonesia, in India. And so far, it's just a short-term correction. So those markets are now lagging. Now, initially, they were leading the markets, particularly in Asia. They were the strongest markets. Now they're becoming the weakest markets. Now the stronger markets are Taiwan and South Korea. And I would expect, even if there is a correction in those markets, that those two markets will be the stronger performers once they come out of that correction. And certainly now they're continuing to be the stronger markets. Then we have Australia, which is looking very nice right now. It's been consolidating more recently, and it looks to be getting ready for another new run. So
despite the floods?
What's that?
Despite the floods?
Yes, despite the floods. I mean, maybe that's why it's been kind of stabilized a little bit. It hasn't been rallying with some of the other markets, but it looks like it's getting ready to rally. Now, if we have some type of more serious correction in commodities, that could hurt the Australian stock exchange as well.
Let's look at the UAE markets. We had Abu Dhabi Commercial Bank rally 7% in the last two trading sessions. We had a pretty good set of results out for the fourth quarter. Are the UAE banks out of the woods for good now?
Well, I wouldn't go that far. Certainly it's a positive for the banking sector. If we look at the sector indexes, they both held up relatively better than some of the other sectors compared to the larger market in the UAE. But another interesting thing is that now the central bank has required banks to report a larger percentage of reserves in regards to Dubai World. And so this presents a little more transparency in the market. And I think that investors are reacting positively to that.
Thanks for coming in, Bruce. Have a good weekend.
Thank you.
And now it's time for our top stories. Banking officials say those who default on debt are still eligible to borrow from local banks. The debt reclassification regulation introduced by the central bank means both individuals and companies who have defaulted in the past should not be deprived from borrowing from other banks. Officials say those who wish to borrow from another bank must be able to provide guarantees and present their previous default cases as out of their control. Previously, banks have stopped issuing loans to defaulters off the back of information from the central bank's risk center. Dubai International Airport expects to see more than 52 million passengers this year. That's according to the company's CEO, Paul Griffiths. More destinations and an increased number of expatriates living in and around Dubai will help push the growth rate of the airport to 11% this year. Currently, 133 airlines fly into Dubai Airport from all over the world. In 2010, Dubai International Airport broke the record with over 47 million passengers traveling through its hub. That is a plus of 15% compared to 2009. Cargo volumes also posted gains, rising to 2.3 million tons last year, up from 1.9 million the year before. Dubai's newly established carbon trading center is planning to sell 5 million tons of carbon per year through so-called carbon credits. Of the targeted 5 million tons of CO2, which will be sold via these credits, only 25% will be achieved in the beginning, as the center moves from the theoretical to the practical stage. The credits can be then used for any type of project. The Dubai Carbon Center of Excellence was established last week under an agreement between the Supreme Council of Energy and the United Nations Development Programme. Both are looking to set up a framework to address carbon emissions in the UAE and help reduce the country's carbon footprint. And in our fast financial news, property developer Nakheel denies reports that the world islands are sinking. A case earlier this month saw a ferry company hired by the builder claim the islands were eroding into the sea. Nakheel CEO Chris O'Donnell said the world islands are definitely not sinking, washing away or eroding, and that the company is still looking to sell the remaining 30% of the project. And Emirates MBD announces its partnership with the Fine Art Fund Group to launch an art investment fund to tap into the local Middle Eastern art market, which is estimated to be worth around $10 billion. Emirates MBD, which is the largest bank by assets here in the UAE, has partnered with the Fine Art Fund Group to attract rich clients and families who wish to invest in art as an alternative asset class. The art fund targets clients with at least $3 million of wealth. The partnership is looking to break even this year and expects double-digit growth year on year over the next decade. Well, that's it from the business desk. You can contact us at news@city7tv.com. Up next, Laura Buckwell is back with the news.